Hello everyone and welcome to this morning's webinar, and as usual thank you for your patience, although we have started more or less on time. As always, we've just wanted to check out our headsets, audio, and make sure the disclaimer was up on your screen because as you know, this can be a very risky business, so please do not think of using money that you cannot afford to lose. A quick look through the attendees. I can see lots of our regular visitors and some new names, and you are all more than welcome to join us today. If this is your first time, here we are. This is myself and David, and we will be looking at the Forex market through the prism of volume price analysis and looking also how our quantum trading tools can help us with our trading decisions and chart analysis. What we also do, of course, that's just the technical analysis side of trading. You also have to include, you have to factor in not only the fundamental news, but what's happening in related markets, and more these days, what is happening outside the markets, the drivers that are driving the prices that you see on your screens. And you don't need me to tell you that, you know, the biggest driver at the moment, or one of the big, is certainly what is happening over here in the UK with Brexit, let alone what effect it's having on the pound and the FTSE. But it's also dragged out occasionally for whenever the market is in risk off. It says, because it's because of Brexit, which goes to show that you know, this industry is hugely manipulated. And you know, we really do have to know what is really going on, and that is revealed through the price action, but more importantly through the volume. The volume tells us whether the participation that we see in that price move is actually genuine or not. All the elements I've spoken about, the technical analysis, the fundamental, the related markets, we've actually bundled together and put it together in what we call the Forex Trading Library. It's the ebook version, and it's up on Amazon, and it's $9.99. This is a slide from our Forex Trading education program, where we also explain how all the markets are interrelated and connected. Forex very much sits at the middle, in the center. It's the market that responds the fastest. It's where the money flows. It flows because of sentiment. It flows because of fundamental news. It flows because of the other factors, as I have said, political news as well. One market that possibly traders don't really pay much attention to, and that is the bond market. And I have a little link for you later on in the webinar, which I urge you to go and read. It's from FX Street, actually. It's a site that we used to write for, but we don't do so anymore. But they've got a character working for them who writes the most amusing and entertaining analysis of what is going on in the markets at the moment. And he's an ex-bond trader. In fact, he's been a bond trader he's been in the market for nearly 45 years. He says he's been a bond trader longer than the age of most bond traders are at the moment. But I'll give you the link later, and that will explain all as well. And finally, we are going to be, as I said, we've got the quantum trading indicators, a full suite of indicators. This being the Forex, we do tend to look at the Forex specific ones, the currency strength indicator, the matrix, the array, and also the heat map, to basically give us a quick view of what is happening on the charts, what's being bought in the market, what's being sold, what's it being bought against, because it will help us not only reveal perhaps the best trade, the best trade to consider, but it also tells us trades to stay out of. And it's been very interesting this morning because the yen is being sold off. Clearly, we have a view of the market that is risk on at the moment, in the sense that the market is feeling very comfortable about moving into riskier assets. That happens when the yen is being sold. But it's not being sold universally against all its pairs, and we're going to look at compare the moves that we've seen in the pound yen with moves, I think, if you're looking at the euro yen, David, particularly the euro yen. I'm going to stop there. I'm going to take these little slides away and pass over to David.
Thanks, darling, and a very good morning. I was going to say good morning, but it might be afternoon or even evening or the middle of the night where you are. You're very welcome, and glad to see so many people along today. We've got lots of regulars and also some new people, as Anna said, so a very warm welcome to you all. If this is your first time coming along to one of these sessions, as you can see, we run it as a two-hander, Anna and myself. We focus primarily on MT5, but I've got NinjaTrader running as well, so just to keep an eye on things on both platforms. If you have any questions, we're more than happy to answer them. If they're short ones, we will answer them in the chat box. And if they're longer ones, we will answer them on air for you. So I will pass back to Anna and we will get going.
Okay, as I said, this morning has been a nice sell on the Japanese yen. Because it's the market sentiment seems to be positive. Just as a quick reminder, we have obviously the FOMC tomorrow, and just as an aside, it seems to be that the market expectation is that the Fed seems to now have a fourth mandate, which is basically to support the equity markets, because every time the Fed has said anything or even hinted that possibly interest rates, are going to rise more aggressively than they have, there's been an almighty tantrum, and the most spectacular being the one in December. Sorry, I'm just fiddling with my headset. There seems to be a problem with the connector. In December, when we had this, when they raised interest rates, Powell was very hawkish, and we all know the market took a complete swan dive. Since then, as we know, the market has recovered, primarily because the Fed has rowed back and sort of said, well, it's all because of, we'll have to look at data. And certainly the data has been not so fantastic recently. So this is what we have to be aware of. Not only the fundamental news is whatever it is, the data. We also have to interpret what the central banks may or may not be thinking. But so ahead of tomorrow, the market is very much in risk on, isn't it, David? Risk on mode. Yeah, I always get confused because it's selling the yen. Right. Where did we start this morning? We started with the CSI, which is what we always do, and here we see the magenta line, which is the Japanese yen, which has been selling and selling, very nicely. And then what we look at is, well, what's it being sold against? And one of the clear winners has been the euro, and David has got the euro yen up there. Have you got the CAD yen as well, or just the euro yen? You've just got the euro yen on Ninja. David's got the NinjaTrader platform. I've got MT5. But as I said, it's not been universal against all its counterpart currencies. And for me, my interest is these two lines: the yellow line, which is the British pound, and obviously the magenta. And you can see here they're moving in the same direction. And what we mentioned last time, can't remember if it was this session or the New York session, is this indicator, the currency strength indicator, is actually much more sophisticated than simply, it's something that's overbought or oversold. We're looking for a potential reversal trade, because it also gives you a hint and a clue of what is happening when the lines are moving in the same direction. Because when they're moving in the same direction, you don't have any clear divergence. And that is very clear that we can see on my workspace for the pound yen. I have the 3-minute chart here, which I'll just expand. I'll also explain a little bit more about this histogram that's over on the left-hand side. This is from the volume point of control, and I've done something slightly different with the VPOT. Normally, this histogram is over on the right-hand side, but I've actually pushed it over to the left, and I'll explain why. And the indicator, we have the CSI, which tells us the pound yen is most likely in congestion. It is confirmed with our volume point of control indicator, the VPOC. Now, again, this indicator works on many levels. Primarily, it is looking at the chart through the prism of volume, price, and time. It gives us the support. Not only does it gives us the fulcrum of the chart, in other words, the not the center point of the chart, but the point on the chart on which the price action is rotating. It will also give us a range between the ceiling and the support for the price action. this is the 3-minute chart. The 12-minute chart for the CSI tells us that the lines are moving in the same direction. I've actually got an hourly one, as you can see here. Where is it? They are also moving in the same direction. So the multiple time frames tells us that whilst it may be possible to take a trade in the faster time frames on the pound yen, and certainly on the pound yen because it's a very wide-ranging pair, in reality, you are going to be taking much more risk because the price is bound. It's rotating around what we call the fulcrum, which is the yellow line, on the point of control of the chart. It's the point on the chart where there is no overall control of the price action, that there is no firm direction either one way or another. That's what the volume point of control does. What the histogram then tells us on the left-hand side is it tells us the density, if you like, of volume at the different levels, different price levels for this particular pair. And what we are interested in is when it is at the fulcrum, it will be at its most dense, as we can see here, because this is the time it's spent the longest in this price region. Then we have high volume nodes, which we call here, not as high as the VPOC, and then we have what we call low volume nodes. Now these are really important because not only does the VPOC give you a view of support and resistance through the prism of volume, it also tells you very clearly on the chart the points at which, should the price action reach these low volume nodes, it is going to go through those regions very, very fast because there's no cushion there. There's no cushion of volume to hold up the price. And what often happens is when it reaches these low volume nodes, not only does it gives you a sense it will go through fast, but it often triggers the volatility indicator. So with this indicator, not only do you have a framework for the price action in terms of in the phase of price action that we're looking at, is it in congestion? Or is there some kind of divergence? Is there some firm direction? But what it also tells you is that when the price action reaches a particular level, according to the VPOC, you can also be pretty much be assured of whether it's going to go through with momentum. If it's going to go through with momentum, you then have the issue of facing that it could possibly trigger a volatility candle, the volatility indicator, which is here, this little purple dots that we see here. And what happens with volatility, almost inevitably, is that price will retrace to within the spread of the candle. So I hope you begin to see that not only does it give you the framework of the chart, some potential trading setups. You could wait until there is firm divergence in this pair. At the moment, there definitely isn't firm divergence. It's pretty much range bound and rotating around the VPOC. But what it also tells you is that when it reaches certain levels, what you can expect the price action to do at those levels. And you can then formulate your approach, your tactic accordingly. And that's what I've got to say about that. David, is there anything you want to add to that?
Yes. Thanks, darling. I've always got something to say. Just to really add to that, what you can see developing on the chart there is also reinforced with conventional price-based support and resistance. The support and resistance indicator on MT4 and MT5 prints these two lines, the solid line and the dashed line. At the top there, you can see that region is very strong because it's a solid line at 147.73. It was breached a couple of times, but there was no follow through above that level, so it's getting stronger the whole time. To the downside at 147.54, again, the next one down, on the solid line at the bottom, that one. Again, you can see we've got a solid region of price-based support in this case. So the two regions, not only are they defined by the volume point of control, but they're also defined by conventional price-based resistance, and it's using the two in tandem, which really gives you the different perspectives on support and resistance from a volume perspective, support and resistance from a price perspective. And once either of those two levels is breached, and you can see down at the bottom there, it's been tested twice, it's about pinged off. And also remember that these levels are absolutely precise. We're not talking about vague, broad levels of support and resistance, which is fine. What we're talking about here are absolutely pinpoint to the nearest pip levels of potential support and resistance. Now, the other way of using the indicator, certainly the support and resistance indicator at any rate, is those are fine, but you can also look at it from a different perspective when you start to get clusters of them also. So if you get a couple of solid lines relatively close together, then that's telling you that there is an even stronger region, probably on a range, because they won't be bang on top of one another. But if they're close to one another, then that's telling you, this is a very strong region. These are the pinpoint prices, but in terms of strength or weakness, it's very strong, and it's extending over this particular range of price. So I just wanted to make the point, because support and resistance is just a key plank of technical analysis. It's a key plank of volume price analysis, and it pulls everything together. What's interesting now, you can see the price is literally testing that level again. And it's held. Now it's popping through. The question is whether it's going to hold through that region. It may well peak over the wall and pop back up again. Just keep an eye on it for a minute. Just see. I'm just going to switch off. Got a frog in my throat. Hold on. Apologies. Just see what happens. And bear in mind, we are talking pips here. We are talking literally a pip value. You can see we've had a rise in volume from the previous candle on that down candle there. So the volume's risen. You can also see the trend monitor transition that's been flip-flopping around in this congestion phase, but it's now starting to transition to, well, it has transitioned to bright red from the dark red. And you just get a sense of how strong this level is. It looks as though it may have held again. Just have to be patient and wait. Got to wait for a close beyond that level. The question we're always asked is, well, how far beyond that level? That's a question you can't answer. That's a question you have to answer yourself. It's a question that only you can judge whether the close, the breach of a level is sufficient, gives you sufficient comfort to take the position in the market. If it's very close, you're probably not going to take it, and by very close, it might be a few pips, let's say. So what is reasonable? I would say something, again, it's all personal, but if the close is, let's say, 5 pips or maybe even 10 pips further away, is that sufficient? What is the extent of the congestion phase I'm looking at? And more importantly, if we do get a close away from this region, what have I got below? Is there more support and resistance, or in this case support, which is like to come into play? Have I got more volume nodes building on the slower time frames, etc., etc., etc.? And you factor all those things in. You can see there it looks as though it's holding again. That's the power of the support and resistance based on price, and you then overlay that with the volume perspective as well. Just going to pass back to Anna.
And of course, this is just one time frame, and you would be looking at this in through the lens of multiple time frames. And in fact, this is the 12-minute chart. Again, we have the price around the volume point of control. I have, on this occasion, I've left the histogram over to on the right-hand side, and we can see here it's actually attempting to break away from the VPOC. And you can see here again, based on price, it's only a hatched line, but it still has held on a number of occasions. It hasn't reached a low volume node. It needs to breach this level, 147.49. Then we have a low volume node, and then it would be a fast move through. Even the strong support lines that we have here from the price-based support and resistance, I've also got the S1 of the Camarilla. So it's a low volume node that would go through reasonably quickly, but it has to be supported by lots and lots of participation, lots and lots of activity, as it were. So, you know, it's from a support and resistance perspective, it's quite a tricky picture for the pound yen. And then my final time frame is actually the hourly chart, and here I've just got the Camarilla on here because I want to have some idea of the hierarchy. You know, where am I in these levels based on the protocol? And we can see here this is the S1. You can see the number of times that it's been tested. It hasn't managed to get through, and it looks as though it's more bearish than bullish at the moment. And if we go right up to the hour, we've also got the daily chart. We've got the volume point of control on the daily chart as well. What that is telling you is that whilst there may be an opportunity to take some pips, certainly on the faster time frames, and we are talking getting in and getting out very, very quickly, because of the structure of the charts across the time frames, it is not going to be easy to trade. You know, the pound yen is one of these pairs that, you know, when it moves in, you know, nice, you know, reasonably wide range on the day, you know, allowing us the opportunity to take some nice trade. It's also a very volatile pair because it's a yen pair, and it's also volatile because it's a pair that has a lot of algos trading it as well. But, you know, your analysis across the time frames, by looking at the structure of the chart, a phase of price action that you can see on the faster time frames, and is also being mirrored on the slower time frames, also gives you an indication of whether any trade you are likely to take, how tricky is it going to be. So if the pound yen is, you know, if you're the kind of trader that's just looking for a trading opportunity, you might say, you know, no matter how much I know I can get a lot of pips on the pound yen, given what I can see on the charts across these time frames, maybe I should be looking for a pair where there is some firm direction, there is some strong divergence. And, you know, we only have to go back to our CSI to say, you know, that it highlights there have been some fantastic moves in the euro, in the Canadian dollar, certainly against the yen, but also against the British pound, which has actually been falling. Now, what we can also see on the 12-minute chart here. Let me just move this down to a faster time frame. Let's go down to the 5-minute chart on here. There is actually a bit of divergence that's coming through on the pound yen on CSI. Let's see if I can, there we are. Where are we? Yes, we can see here they were moving together. You can see we're moving together here, there, and there's a cross there. And in fact, we can see the pound, there's been some, you know, heavy selling of the pound, and it looks like there is a divergence. Whether that will carry through, how much that will carry through onto the pound yen, we will have to wait and see, because across the time frames it is still, I'd say, locked around the volume point of control, but it is trading within a fairly narrow range, as I said, across the slower time frames. I'll pass over to you now, because you've got. Let's go and look at something that I know sometimes, you know, people come, they write to me and say, oh, you know, we want to come to your webinars, but we want to see lots of price action moving, and, you know, lots of reversals and trend trading and what have you. Well, we all like that as traders. It's great, of course we do. We want to see a reversal, we want to jump on a trend, we want to make some pips. But you do have to remember that most markets are in congestion for most of the time. They're range bound because they're waiting for some kind of catalyst. And understanding what you are looking at on the chart in terms of the phase of price action, what is being reflected on the chart, is actually the biggest part of trading. And also knowing if you're going to take a trade in these kinds of market conditions, that for this pair, the additional risk that you will be taking. Traders do. You know your risk tolerance. I don't. All I can do is point out to you that if you are looking to take a trade in an instrument, forget whether it's the pound yen, because this applies to whatever you trade, you're looking at this kind of scenario across the multiple time frames, the risk on that trade is that much higher. So as a trader, I would far rather go and have a look at something where I can see some firm divergence. It is, I have got the chance of a move, of a fast move, not too fast because I don't want the volatility indicator to trigger, but at least I have I've reduced the risk on that trade. And in fact, going back to the 3-minute chart again quickly, as we can see here, that held, and in fact another level has come up at 147.52, which I suspect is probably a level on one of the slower time frames. So I'll keep an eye on this, because we have to be patient. And in fact, patience is also the word that the fact that Fed are going to be adopting tomorrow, according to my little chum, Tim. And again, if you haven't come across the guy over at, he's a professor at one of the universities in Oregon, I think. He's an obsessive Fed watcher, obsessive in a good way, in the sense that he really does know ins and outs of the Feds and writes very in a nice, easy way. So I'll put that link up as well. Enough of me. I'll pass over to David, and he can tell you what he's been looking at. Well, there's also the euro pound, isn't there, David, there as well? So.
Just changing screens. Hopefully you can see mine coming up any second now. Yep, brilliant. Okay, over onto NinjaTrader. I've actually started with, I've been looking at all sorts of things, obviously looking at Anna's charts, but also keeping an eye on other things as well. And there's been a lot of volatility, particularly on the yen pairs, which came in just after the London Open, and that's what's tending to cap everything. But I just wanted to start with the currency array because it really does highlight what Anna was talking about in terms of risk. Because one of the many things you want to establish and try and establish through the currency matrix and also through the currency array is not only strength of trend, but also universal sentiment. And one of the easiest pairs to do that with is the yen, because it's always the counter currency. And therefore, in a perfect scenario, the yen pair should always either be above this midpoint line here, this fulcrum, if you will, of 0. So they should either all be above here or all moved down to this side, which then reflects the fact that you've got universal sentiment towards the yen. And therefore, whatever you're trading in terms of a yen pair, you are trading with the sentiment of the market globally, and you're not trading in isolation. You're not paddling your canoe against the torrent of a river, which is fine on occasion, as long as you're aware you're doing it. But most traders aren't aware of what they're doing because they're looking at one chart and assuming that everything is the same across that particular currencies complex, which is generally often not the case. If it is, risk is low. If it's not, risk is much higher. That's what we've got at the moment. It's also pretty sluggish because what the currency array also reveals is the strength of trend. And when you've got a very strong trend developing, you'll see the lines up at this sort of angle, 60 degrees, maybe even 70 degrees on occasion from the horizontal, and the same down here when you've got bearish sentiment. At the moment, what we're seeing is two things. First of all, a mix of sentiment, because in terms of the Aussie yen, for example, if we look at the extremes at the moment, the selling of Aussie and buying of yen, and yet here we've got buying of euro and selling of yen. Now, obviously you'll be looking at this again in multiple time frames. I've only chosen one just to make this relatively simple and straightforward. But what you're looking at then is multiple time frames. And in addition to that, what you're now trying to figure out is whether these pairs below the level here are actually moving up to join these four here, or are we seeing the reverse of that, where these four here are actually moving to the downside? Now, obviously, some of that will be revealed by the chart detail, and again, multiple time frames, the CSI, currency matrix, etc., etc. What it also tells you is that pairs like the dollar yen, for example, which are pretty close to the middle, for the time being, they're not developing bearish or bullish sentiment. They're just in a congestion phase. The pound yen was certainly higher up a few minutes ago, and it's now starting to drop a little bit. So maybe we're starting to see the beginning of bearish sentiment towards the pound yen. And then what you're looking at, if you're considering a move there, is really whether you are starting to see that perhaps up here, where these pairs are also starting to move to the south direction. So it's all there. You've just got to understand what it is you're looking at, and the currency array really reveals all of that in a very graphical and easy to understand format. You see the trend, the strength of trend, momentum, and you also see sentiment. What you've also got on the right hand side here is the second column, the ranking ladder, alongside the ranking ladder, which gives you a heads up to potential scenarios of where a currency pair, as opposed to a currency on the currency strength indicator, here we're dealing with pairs, where the pairs are approaching the overbought or oversold state. When they're approaching, they are in the darker colors, or either darker blue or darker red. When they're at an oversold state or an overbought state, they will change color to a brighter color. As you can see here, Aussie CAD potentially at an oversold state for the 10-minute time horizon. Just go back to the CSIs, let's see what's going on there. This is on 15-minute. We've had a decent rally in the euro, but it's now very strongly overbought. You can see the yen here is flatlining again. We've had some decent buying in the Canadian, but again, with the yen flatlining, and just to pick up on what Anna was saying, when you're looking at the CSI, you're constantly looking at which pairs are traveling in the same direction. You wouldn't be interested in the euro CAD, for example, right now, because those two are traveling in the same direction. Both got good momentum, or had good momentum. They're starting to slow a little bit now. But in terms of looking at that as an opportunity, given the steepness of the Canadian line versus the steepness of the euro line, at this point in here on a price chart, you might well see a little bit of trend developing in favor of the Canadian, because the momentum in the CAD is stronger at this point than the momentum in the euro, purely because of the steepness of the line. It would be a minor trend. It would be a trend nevertheless, but it wouldn't be the strongest trend, purely because those two are traveling in the same direction. Let's just head back to the charts, and I can't remember which one I left up. I think it was the euro yen. There we go. Yeah. Okay. And this is what I was saying. What you're seeing on the euro yen, I think it applies to the CAD yen, but not the Aussie yen, interestingly. So this is not a universal reflection of what went on at just after 8 o'clock. But you can see here, if I just pop the 10-minute open, this is London, 8 o'clock. And very soon thereafter, we had a big surge in volume. Price shot up, very rapid move, and the volatility was triggered. And that's where we've been trading ever since. That's on the 10-minute, we had it on the 5-minute, and we had it on the 3-minute as well. And when you see that, it just tells you, be careful, be cautious. I'm likely to see price congest for the time being. If it clears, terrific. If it doesn't, I'm expecting congestion, and worst case scenario, a reversal. And of course, when I say worst case scenario, I'm assuming you're long. If you're looking for a reversal, fantastic, because that's what's setting up on the CSI at the moment, is that the euro is running out of puff. It's had a decent move, and now it's very heavily overbought on the CSI. That's also reinforced by the fact that we've got the volume point of control up here with strong volume. It's now rotating around that region. If we look at some of the well, you can just look at the price action itself, ignoring the volume, putting the volume to one side for a minute. If you were just, let's say, a price action trader, okay, we've got an indecision here that tells us that we're just confirming we're in congestion. Then we see this candle, very deep wick to the upper body, hardly a sign of strength. Similar thing here, more weakness here, another effort to rally fails. Okay, we've got a little bit of support coming in on this one and the next one, but then another effort to rally. So within that phase of price action, you've had 1, 2, 3, 4 efforts to rally, which have all failed to get through what is quite a decent area of volume resistance. Are you comfortable getting into a reversal trade if you're seeing this set up as a reversal trade? Again, you're looking at multiple time frames. You're looking at the CSI. If the CSI is heavily overbought on euro and oversold on yen, then that's a decent possibility. Trend monitor hasn't transitioned yet. You wouldn't expect it to just yet, but certainly if this continues for a couple of bars then you will start to see that transition through to a darker color, darker blue, might go to dark red. It doesn't always go through the 4 phases of color from bright blue to bright red. And then you overlay the volume in terms of that. We can compare the volume in this piece of price action here because this is London, so we're comparing like with like. Good volume under that one, confirming the weakness. Some support coming in under that one. Decent volume under that one, again confirming the weakness, and the same under here. And a lot of volume under the doji candle there with the a long-legged doji candle, really. So that's why we're seeing congestion. We're seeing it across the time horizons. Interestingly, down on the 30-minute, we didn't see the volatility triggered, so there wasn't enough price action in terms of a 30-minute time frame to trigger the volatility candle. What's also interesting here in terms of, just move that out of the way, this is the equivalent indicator on NinjaTrader to that on MT4 and MT5. In other words, it's based on price support and price resistance. The thickness of the line here, in the way that MT5 is a solid line, and that denotes a strong area of either support resistance. On NinjaTrader, the way the accumulation distribution indicator works, it's based on price, but it actually thickens the line according to the strength of those regions. And the longer these regions are tested, the thicker that line becomes. And you probably can't see it, but over on the right-hand side, it actually denotes with a little number how many times that area has been tested, either from above or below, and therefore acting as support or resistance in the past. What's interesting about this region is we've got a low volume node here at 126.40. So if it gets up to there, great, it should go through there fairly quickly, but then almost straight away it runs into this big wedge of price resistance. So it's got to battle its way through there, and that will only be achieved with volume. Just go to the CAD yen, which has a very similar profile. There we go. And what's interesting about the CAD yen is that we are now starting to see, if I pop this up, this is the same time frame, 10-minute. We had the volatility here, we had the ton of volume coming in. Now what we're starting to see in terms of the CAD is a possible move away from that region, clearance away. We've got a low volume node above. And what's interesting about that is that if you're considering the euro, obviously it will come back to the CSI, and we're looking at the chart and what's going on in terms of volume and price and everything else. But it could be a signal that the yen is selling off, and maybe selling off universally, although it may just be local strength in terms of the Canadian dollar. You have to figure that out for yourself. But it's interesting to see that we're moving away from this region. And if we go down to the 30-minute, again, we didn't get volatility on the 30-minute, but what we have got on the 30-minute now is we're now approaching the volume point of control for this particular pair in the 30-minute time horizon. So again, if you're an intraday scalping trader and you're looking to jump on this opportunity, a word of caution, because we're now approaching the volume point of control down here. So the expectation is that we'd like to see some congestion build. So if we're scalping and we see the market pause, then it's not going to be any great surprise. And indeed, if we head up to the 3-minute time frame here, we've had a bit of weakness coming on that last candle, big wick to the upper body, closed about halfway down the body of the candle or the price action, and decent volume under there as well. So it's not looking terribly strong at the moment. Yes, we've got low volume ahead, so if we can break through there, then it should carry on through that relatively easily on the 3-minute time frame. Just go to the center one, the 5-minute, similar sort of thing. Not so bad. We've got a wick to the upper body, but it's not as developed as on the 3-minute, so it's not so bad. Decent volume under that last candle. Low volume node ahead. If it manages to get through that, then we should be on to a higher level. Got the Renko running, as you can see down here as well. This is the Renko Optimizer on NinjaTrader. It delivers the optimal setting for the associated pair. In this case, we're running at 12, and what that means is we just move the decimal point back 1. It means we're running at a 1.2 brick size. It actually calculates and delivers the optimal setting for that particular pair in this particular market at this particular time in the session. And as you can see, we've got the accumulation distribution on here. You can see the little numbers here. We've got a lot of 1s, 2s, and 3s. This is the most developed, 3 down here. You can see why, because it acted as support down here for the reversal. These are less developed, the 1s and the 2s. I think I mentioned Conkers last time round, which is a very UK event in the autumn. But you can see it all laid out here. And we've obviously got the trend dots on here, and we've got the trend monitor working exactly the same way. They really do complement one another. The trend dots work very close to the price action, so they will always reflect changes in sentiment first. It's like that is your early warning of a pause in trend or a shift in sentiment. The trend monitor down here will take a longer term view in inverted commas. It will, for example, here where we had a reversal, the trend dots, as you can see, transitioned into red. The trend monitor didn't really transition at all. It only gave a flicker here once we got to this point into a darker blue, and then we're back out again as the market picks up bullish sentiment again, and we're back out into the bright blue once more. But using the Renko in combination with time-based charts is a fantastic way to smooth out the price action, which can be a little bit spiky. And you can also use it as either a helping you to stay in tool, or a trigger to get in, or indeed a trigger to get out. It's just a great complement because it gets away from the time aspect that is always governing time-based charts, and you're dealing with a chart that has no time involvement. Everything on a Renko is delivered through the prism of the setting, whether that's an automate, whether that's the setting you've chosen, or whether you use something like the Renko Optimizer here, where it delivers that setting for you, the optimal setting, or whether you're using on the MT4, MT5, where you have the optimal setting there as well, delivered through the live Renko. Let's just go back to the CSI for a moment. Actually, before we do that, let's just head over to the 3 main currency indices, which really just reflect what is going on in the market at the moment. These are on 5. Sorry, I've got this on 15 over on the right-hand side for the euro, but the others are on 5 minute. This is for the yen. You can see there, it's there's no great strength at the moment in either direction. We're sort of flip-flopping around in a little bit of bullish, then a little bit of bearish. So there's no strong trend one way or the other, certainly on the faster time frames at any rate. This is the dollar index, and I'm just referring back to Orla's question about the Dixie. I know she asked about just an update on the Dixie and how to use that index. Basically, we developed versions of the standard, if you will, dollar index, which for years has been based on the Dixie. Now, the Dixie has been around for 40 odd years, I think, and in our opinion, it does have limitations but you can't say that it doesn't have value. Of course it does, because it reflects the dollar. But what it doesn't have, it tends not to have a good balance. First of all, you've got the SEK in there, which we haven't included in the Dixie. We had to replace that because the SEK is not a widely available currency on most MT4 or MT5 platforms. So we didn't want a scenario. Sorry? Yeah, the SE is it's a krona. Swedish krona, sorry, beg your pardon. So what we didn't want to have is a scenario where customers were forced to use particular platforms because they offered the SEK. So within the Dixie, we replaced that. But also the Dixie is not really, in our opinion, I have to say, is not really representative of the currency world as it is now, because it's so heavily weighted in terms of European currencies and less so in other currencies. The euro carries a massive weighting in the Dixie of 57 point something percent, 58%. And if you lump in the pound with that, so it's fine if you trade the euro. Yeah, as Anna says, it's fine if you trade the euro dollar, but trading anything else, you put the pound in, I think it takes up to something like 65%. So it's really not terribly representative. So we developed other indicators which are much simpler in execution in terms of how they're created, because they're very much based on a basket of currencies where each currency carries an equal weighting. That's not to invalidate the Dixie. It's just to say that, well, you know, here's a choice. It's a choice between something that's perhaps a little bit more balanced, and here's the Dixie. So whichever you choose, you know, it doesn't invalidate what's going on in terms of the dollar performance, whether it's rising or falling. It's just against a slightly different makeup content of the basket of currencies that reflect the index. This is the dollar index, just based on 4, equally weighted 25%. But I'm sure if you looked at the Dixie, it would be pretty similar. Let's just pop that out of the way. And then finally over to the euro. This is what we've seen so far today. This euro strength, which kicked in about 4 o'clock, been going for 4 hours. And now we're starting to run into some pretty stiff price resistance up here, certainly on this index on 15. And that's why we're seeing a bit of a pause in the euro for the time being. Yeah, I'll move back. Just going to pass back to Anna. Just head back. Oops, there we go. That's the CAD yen. You can see there, we're starting to see that CAD yen starting to pick up a bit of nice momentum. But, you know, you've got to be cautious because we're down at the VPOC here. So we've got to see this moving away. We've got to see that develop, continue away from there. But that's a nice little move that's developing there. We'll just go back to the currency array. Let's just have a quick heads up on that. Should be developing there. You can see the CAD yen up here, just below the euro yen. So it's, and you can see it on the ranking ladder here. This is where we are. But you've still got this Aussie yen down here. There's still mixed sentiment. So the takeaway from that is, if you're going to trade the CAD yen, fine, but be aware you're trading in an environment of mixed sentiment towards the yen. So you're not trading with the river. You're trading in perhaps a river. I'm trying to think of an analogy, but there's a lot of eddies and swirls going on in there. Maybe you're in some sort of rock pool where the water is swirling around in different counter directions. That's what you're trading right now. You may be okay, but be aware that the risk on that trade is much higher. Going to pass back to Anna.
Actually, while David was speaking, we will have a look at the pound yen, because, as I said, they've got the divergence amongst the yen pairs. They do normally, you know, march along in together, but there is also pound news at 9:30 this morning, some fundamental news. I've actually pulled up the Euro Aussie. The Euro Aussie is a really interesting pair because, first of all, it can deliver some really nice trades. Particularly around the European Open, and this is the 3-minute chart, and it's a really nice example of what I was saying with regard to low volume nodes, volatility, significant levels, you know, levels that are tested multiple times. Looking at the CSI that I have on another screen there, I can see the euro is still pretty overbought at the moment, and the Aussie is actually still well, it's kind of at the bottom, but it's not quite turning up. So we'll see what happens on that. But I just wanted because, as I said, it's just a really nice example of what I meant by levels, price-based levels, levels with that have volume in them, and also low volume nodes and volatility. It hasn't stayed relentlessly blue. We've had some pullbacks in this pair. We can see here, this is the trend monitor, and the pullbacks are denoted is when the color doesn't go to a bright red, it goes to this in-between color before it goes into a bright red. If we look at the timestamp here, this is 2 hours ahead of the actual time. So Europe comes in at about, is it 7 o'clock, David? It's an hour before London. Let's say this is 8:30, which is 6:30 Europe time. We'd had this move higher from the Asian session, you know, with some reasonable, reasonable volume. Then we get this little sort of shooting star up here, and actually it hits a strongish level that we have, price-based level here, comes off, pulls back a little bit, and then as Europe gets underway, this is when really the buying of the euro kicked in on a fairly serious level. Reasonable amount of volume under here, moves higher, but this is the candle which is really interesting, because if you look over here, we've got the sort of low volume node on the VPOC, and I said when it goes through, it will go through this region with momentum, despite the fact we have these strong price-based regions here, and it did actually trigger the volatility candle, and inevitably what happened, the price went back into the spread of the candle, and in fact carried on for a little while. We even got a 2-bar reversal here, a significant pullback. This is 9:51. This is just before London, so this is the price action at the European Open with this volatility. This is now London coming in, and from a price action volume perspective, this was looking like a nice down move, but because then London steps in, whatever is going on the chart, because you have these crossover sessions, sometimes the chart will simply, it will just reverse, if you like, pivot, simply because another financial center comes on board, and the move higher carried on. But then it ran into the volume point of control. It also coincided with the euro looking to be overbought on the CSI. But what is also interesting is this level here, which is the R4, which is at, let me have here, roughly 1.5997. And you can see the multiple times that it has attempted to go through this level. As I said, corresponding with the overbought that we can see on the CSI. So not only do we look at support and resistance on the charts through the prism of price, through the prism of the VPOC, we also have the Camarilla. The R4 is an extremely important level from the perspective of Camarilla, because you can see here a possible breakout on the horizon for a long position. What that actually means is that if you use a Camarilla, once it goes through the R4, solidly through, breaks through, closes above with good volume, that is considered a legitimate breakout. Not always, because as always with breakouts, it will go through, possibly retest, and then go on again. That is why you get that message on the Camarilla. It's because it's been testing the R4 on so many occasions, and similarly it happens when it tests the S7 at the other end of the scale. With the Camarilla, we've actually developed 6 levels, not just 4. So going beyond the R4, potentially a breakout, but we know it's not going to be a breakout, or certainly not going to be easy, because if we look at the CSI, this is actually the 20-minute, we can see that the euro has been overbought, and you have to remember, things can stay overbought and oversold an awful lot longer than we can stay solvent. So we know, by pulling all this information together, we know that the euro is going to come to it's come to a pause. Is it going to produce a legitimate reversal trade? Well, we will have to see, and it may be the best trade may not be against the euro. It was a great trade when the euro was being bought, albeit we had this sudden injection of volatility on this candle here, also coincided with the this low volume node. So we know that price action went through really, really quickly. Also, we knew exactly what to expect when the volatility was triggered. And to be honest, if you were long at that point, most times, I think all the time, certainly when David and I are trading, if we see that and you're in, you come out, because although it doesn't always happen, most times it does. Why risk it? You know that's what's going to happen. If that's going to carry on higher, it has to break the high of that candle. And it did eventually, but it's run into this congestion, into the overbought state for the euro. Now we're waiting for a potential move to the downside for this pair. And the same applies. We look at the CSI, we look at where it is in terms of the the phase of price action it is down by at the volume point of control. I've actually got a 200 MA as well. This is based on the fractal adaptive moving average. We've got, she's grinning because he doesn't use it. We've also got this line here, this shading is also a support line for the VPOC as part of the VPOC. But if it gets through that, goes through there, I know that if it comes back and goes through this region here, it is going to go fairly fast. So I know where it's aiming for in the short term, medium term, if it gets through there, and you know the Camarilla will also tell me where is this, you know, what is the potential objective, price objective for this pair. Well, I've got down here, I've got 59.79 as well. But we just have to wait and see. And looking at the, as again, multiple time frames on the 12-minute, you can see the number of times it attempted to go through this level. You've got candle after candle with a spike to the top. So you've got weakness, weakness, weakness. And in fact, it's coming off. Going back to just regular price-based support and resistance, 59.90 is the first target. Then you've got another strong, and then you've got a low volume node there. The VPOC is all the way down here at 59.66, and going up to the hourly chart again. We have here now the values that you see on the hourly chart for the Camarilla are values that will stay on the chart for the rest of the week. The values that you see on the faster time frames, they change every 24 hours, every time the market updates. And we can see here, it's actually at what we call the R1, the S1 and the R1. Between that level there is we call the buffer, the neutral zone. It's a congestion phase. Somebody actually asked a question. I don't think they're in the room at the moment. What do you mean by congestion? Well, you know, to be honest, if you want to be serious about being a trader, you have got to understand the phases, the type of price action that you are seeing on your chart, of which congestion, and it can be a congestion with volatility, it can be a quiet period of congestion with no volatility, but it is the range on the chart that the price is oscillating between. It's like a sine wave, and you know, which begs the question that if you don't understand, you know, these very basic things about phases of price action, trend, divergence, congestion, then, you know, you really must get yourself educated about that. And you know, you can either buy the books on Amazon, $4.99, Forex for Beginners explains it. The Complete Guide to Forex Price Analysis explains it. The whole library, $9.99, or we go into much deeper detail in the Forex trading program. And going back to right up to the daily chart, so we have some perspective, some context of where we are with this particular pair, and you can see it is actually it's trading around the volume point of control. There is no firm direction one way or another. There will be firm direction because nothing stays in this state, if you like, this state type of price action forever. Is there anything you want to add to that, Diane? Is that it? I'm just going to pop back down to the, as we always do, end up with the, I'm sorry, what the euro, the pound yen has done. We had a bit of volatility on the 3-minute. What happened there? Oh, yes, there we are. Oh, my goodness. No. I love the pound yen. It's such a great trading, teaching tool. And, you know, just because you're not trading something and you're looking at something, it does give you lessons of what to look out for. And as I said, a nice low volume node, rushed through that straight away with the volatility was triggered, and away you go. I think if anything a pound yen tells you today is you treat with great caution and potentially, you know, stay away. But that, you know, we are on the fastest time frames. If you're on the daily chart, if you're looking to hold positions longer term, wouldn't necessarily suggest it given what's happening in background. You know, all that is smoothed out in the slower time frames. Anything you want to say to that, darling? Anything you add? No, that's it. Fine. Okay, I think we'll draw everything to a close. Oh, very quickly. I did promise you a couple of. Let's have a look. Where is he? Where's my new best friend? Here we are. Chuck Butler, not a wonderful name. It could only be a bond trader, couldn't he? There we are. He writes for Forex Street, which is a great site, great free resource site for traders. As I said, we used to take content from us, but we didn't, but no longer. But no matter, we're still friends. And this is what I'm saying. He talks about the bond market, that the yield on the 10-year Treasury slipped further lower, trades at, as he was saying there. And it tells him, what does that say? The bond guys are not believers in the US economy. They see the Fed cutting rates sooner than later. And he says, I know what you want, how I got it. And as he said, he's been around since 1973. That's more 45. Most bond traders aren't even 45 years old. So I think he knows what he's talking about. But he's got a very endearing way of writing. And I have to say, everything he talks about there is David and I actually cover in the Forex program. But before I give you the link to that, the indicators that we've been using today, that we've been referring to, are from our own. They've got our own that we've developed for our own trading, and now we share with lots of other traders around the world. They're from quantumtrading.com, NinjaTrader and MT4. Just scroll through, and if you go down to the individual indicators, you can click on there, and you will find this is the dynamic support. Let's go to another one today. Here we are. That's it. This is for MT45. Lots of videos, lots of support pages about how the indicators work. And the Forex program, the trading program, is here on this site. Quantum Trading Education gives you the modules, what you get. But I have to say, I have to stress that with the education program, you do actually get all the indicators as well. It's not just the modules. It does also include all the indicators. So as I said, it's the actual cost of the program, if you separate it out from the cost of the bundle, only comes to, it's less than $500, isn't it? $497. You can't buy it separately. As I said, the program comes with the indicators and the modules. But the indicators themselves you can buy individually as a bundle, and we will always credit you for anything that you may have bought and you want to upgrade. Anything you want to say to that, David? No, that's it. Lovely. Thank you so much for joining us today. Apologies, my headset keeps dropping in and out, but I'm pretty sure you can hear me. We are back. We are scheduled for Thursday, but we may have to move it for Thursday because it's my birthday. So but we'll be back on Friday. And if you were planning to come later on in the week, it will probably be Friday, and you will get an email to that effect. Thank you so much for coming along today. David is waving goodbye. Yes, goodbye. Have a great day's trading. Lord knows what's going to happen with Brexit. Huh? It's a yes, but lots of trading opportunities in shambles. That's what we want. Unprecedented times. Have a great day, and we'll catch you next time.